Have you ever heard someone say real estate can help you save thousands in taxes only to get hit with confusing terms like material participation or passive activity rules, and suddenly it feels like you need a degree in tax law just to play the game? Yeah, well, I've been there too. But here's what most people don't realize. If you want to actually use real estate to reduce your taxes on your W-2 or 1099 income, material participation is one of the big keys to unlocking the door to tax savings. Because material participation is what turns your rental income from passive to active, which means you can use losses to shelter your earned income and save big on taxes. It doesn't matter if you own long-term rentals, short-term Airbnbs, or a mix of both. If you want to keep more of your money, you need to understand material participation, what counts and what doesn't. So in this video, I'm going to break it down in simple terms, what material participation really means without drowning you in legalese, the 8 categories of activities that count toward material participation with real-world examples from my own investing experience, and the truth about what happens if you use a property manager or invest with a spouse. Now before we get started, a quick disclaimer. I'm not a CPA, so everything I'm sharing is for educational and informational purposes only. If you want to implement what you learn in this video, be sure to consult with a CPA who specializes in real estate. Okay, with that, let's dive in. Let's start with a simple question. What does the IRS really mean by material participation? It's the government's way of asking, are you actively working your real estate business, or are you just passively collecting checks? And here's why that matters. Because the IRS treats income from passive activities, like rental properties, differently from active income. If you're passively involved, your real estate losses get stuck. They can't offset your W-2 income, business profits, or other active income. They just sit there suspended as passive losses, doing absolutely nothing for you. But if you materially participate, those same losses suddenly become useful. You can use them to shelter your income from taxes, potentially saving tens of thousands or hundreds of thousands of dollars a year. So how do you know if you qualify? The IRS has 7 material participation tests, but let's keep it simple. Most real estate investors qualify using one of 3. Number 1, you spend more than 500 hours on your rental activities during the year. Number 2, you do substantially all the work, meaning you're doing almost everything yourself. Number 3, you spend 100 hours or more and more than anyone else involved in the business. Again, you only need to meet one of these to qualify. Now, before we dive into what counts as material participation, here's an important distinction. Material participation is important for 2 main strategies you'll be using to lower your taxes on your income: real estate professional status and the short-term rental tax strategy. For real estate professional status, most people choose the 500 hours test. For the short-term rental tax strategy, most people who are just starting out choose the 100 hours and more than anyone else test. So it's an essential part of both strategies, which is why it's so important to understand what counts as a material participation hour. We see investors banging their heads against the wall trying to figure out if a certain activity counts. And it's one of the most common questions we get from our students of our course. They want to know, for example, does the time it takes to drive to my property count as material participation? What about the time I spend on real estate courses? The answer to these questions are unclear. And the reason is the IRS doesn't provide this level of detail. They don't tell you specifically what counts and what doesn't count. What they do provide are broad categories of what counts. From there, you need to use your best judgment. Later on, I'll give you 2 tips for helping you stay compliant with material participation hours so you don't have to worry if an activity counts or not. So here are the 8 categories the IRS recognizes as activities that count towards material participation. The first one is real property development or redevelopment. This includes time spent planning and developing a new build or a renovation project on an existing property. Essentially, turning a vision or idea into an actual blueprint or plan. For example, currently, we're working on a project where we envision building 2 duplexes and a single-family home on a 1-acre plot of land. So all the activities that go into planning, like working with architects, getting permits from the city, and coordinating with the builder, all count as material participation hours. This is where the judgment part comes in. The IRS doesn't actually tell you that the time working with the architects counts towards material participation hours. But I think most everyone would agree that it should count because it's an essential part of development. Okay, so the second category is construction or reconstruction. This is when you take your plan and actually start building or renovating your property. Now, this could mean swinging a hammer yourself, or it could also be managing contractors. For example, many of our students force appreciation. In other words, make the value of the property go up by renovating properties. They hire contractors, oversee their work, and make design decisions. Even if you don't do the physical labor, managing the construction process should count because that oversight is essential. You can't just let the contractor run wild without checking the quality of their work. The third category is acquisition. This includes the time you spend searching for properties, putting in offers, conducting due diligence, securing financing, and closing deals. This one often trips up investors. The question they ask is, does the time I spend on properties that I don't end up buying count towards material participation? And the answer is unclear. We have asked CPAs about this, and some CPAs say it counts, others say it doesn't count. So what do? We document it anyway and move on. I'll talk about how we approach the hours where it isn't as clear later in the video. The fourth category is conversion. This means changing the use of the property, like turning a hotel into apartments or an office into a rental. With our partners, we've converted over 1,000 hotel rooms to apartments, so all the time spent on zoning meetings, drawing up new plans, negotiating with city officials, all this time should qualify as material participation. The fifth category is rental operations. This covers everything that brings in money or costs money. For example, for long-term rentals, this involves collecting rents on the revenue side, and on the expense side, it involves things like paying for advertising or appealing property tax assessments to lower property taxes. The sixth category is management. This covers all management activities like overseeing and managing contractors and property managers. This could also include overseeing any team members you hire, like a virtual assistant. For example, I recently flew out to meet with our property managers because they had dropped the ball on several promises they made. It was a meeting to get things back on track. All the time I spent with them should count as management hours. The seventh category is leasing. Leasing means finding tenants for long-term rentals, showing properties, screening applicants, and signing leases. For short-term rentals, this means setting nightly rates and managing guest bookings. The eighth and last category is brokerage, trade, or business. This one doesn't usually apply to real estate investors. Instead, this applies to real estate agents actively working in their business. For example, listing properties or helping investors find investment properties. Now that I've covered the 8 categories, next I'll cover the 2 big questions we get all the time. The first one is, can I still get enough hours for a real estate professional status or the short-term rental tax loophole if I have a property manager? The answer is yes. There are 8 categories of activities, several of which your property manager isn't involved at all, like acquisitions. Even in categories like rental operations where your property manager is involved, you still have a significant role to play. At the end of the day, property managers miss stuff, so your role as an asset manager is to catch the things they miss and get things back on track, just like I did with our property manager. You don't have to do all the day-to-day stuff, but you do need to be actively engaged and know what's going on with your properties. The other question we get asked all the time is, can I count the hours my spouse spends on our properties? And the answer is yes. Your spouse's hours count toward your total if you file taxes jointly. However, the time your kids, assistants, or other family members spend on your real estate portfolio don't count towards material participation. No matter what questions you may have about what counts and what doesn't count, I think if you keep in mind the following 2 tips, you should be all set. The first, document everything. Keep a spreadsheet or use an app to log your hours, what you did, when, and for how long. I personally like to use my calendar to track my hours. Great documentation can save you headaches if the IRS ever asks for proof. Second, build in a buffer. If the rule is 500 hours, go for 600 or more. Some hours might not qualify, so give yourself a cushion so no matter what happens, you still get the tax benefits. Material participation might sound like tax jargon, but it's really just about being actively involved in your real estate business. And if you get it right, it can open up massive tax savings that most investors completely miss. Want a printable list of all the activities that count? I've made a free guide you can download. Head to semiretiredmd.com/material participation. And if you want to learn how to track your hours properly and make sure that you're maximizing your tax benefits, stay tuned for my next video on that topic. Thanks so much for watching. If you found this video helpful, please like, subscribe, and hit the notification bell so you don't miss upcoming videos on real estate investing and other tax saving strategies.